Stocks see small gains ahead of the important US Fed meet today. Utilities and metals are the bright spots, even as realty and capital goods lose sheen.
SEBI's consultation paper proposes steps to curb excess speculations in the F&O segment by restricting weekly expiry to a benchmark index contract, increasing ticket value and raising margins on pre-expiry and expiry days, among other measures. Market experts foresee a significant impact on volumes and are likely to offer their feedback by the 20th of August.
RBI proposes strong action against willful defaulters, rules out any debt restructuring and allows lenders to swiftly proceed against guarantors of such loans. The rules will apply to all loans above 25 lakhs.
GAIL rallies on widely surpassing income and profit estimates. Torrent Power jumps on an electrifying performance riding on strong demand, while Dixon Technologies has seen a spike, beating estimates on traction in the mobile segment.
And the Bank of Japan raises its short-term policy rate to 0.25% from 0 to minus 0.1%, its highest since 2008, following a rise in wage and services inflation. The central bank also aims to trim its bond buying as per a liquidity tightening plan. Hello and welcome to Halftime Report on CNBC TV18. I'm Ekta Batra and with me is Hormuz this afternoon. Well, it's turning out to be a session where we are seeing, you'd have to say, a little bit of a mixed day of trade, because we have the Bank Nifty, which is absolutely flat at this point in time. We have the mid-cap index, which is holding up quite steadily, so up around 0.7%. And we have the Nifty and the Sensex, which are up around 0.3% at this point. So mixed day, you'd have to say. There is the big Fed decision tonight, so I think the street will be a little cautious ahead of that. But separately, stock-specific action in our markets continue, and we really can't take our eyes away from that. So just to point out a couple, Tata Consumer reacting to its numbers. Divi's, that stock has been quite choppy ahead of its numbers, 2 days up, 1 day down. So Divi's Labs is down around 1% today, ahead of its numbers on Saturday. We have GAIL, which is reacting positively to its conference call. And stocks such as Granules, which is up around 6% post its conference call takeaways as well. And in terms of results today, we have heavyweights from the auto space, Maruti, M&M, Tata Steel from the metal space. So a lot to watch out for from the front lines.
A lot to watch out for indeed. And as you were mentioning, right, it's a big day because all the eyes are on the Fed. The decision comes in later tonight and the reaction will be seen on our own markets tomorrow, and which is why maybe the positions are slightly on the lower side. But 24,940 is where the Nifty is. Yet another question of will it or won't it today. We made a high of 24,999 on Monday, 970 on Tuesday, 954 is the high in today's session. So it's still a question of will it, won't it, but as of now it's steady going for the Nifty. The broader markets are doing well for themselves and plenty of results as always.
Yes, absolutely. We're just fixated on that number of 25,000 and completely forgetting the fact that we've already given returns of almost 15% for the Nifty this year. But nonetheless, now let's concentrate on a couple of numbers. We have Greenpanel, which is the first corporate on our radar. Q1 was a weak quarter for them as their volumes were impacted. Margins also contracted for both the MDF as well as the plywood segment. We have with us Mr. Venkatarami, who is the CFO of the company, joining in to discuss their Q1 performance. Hi, sir. Thanks very much for taking the time out. Revenue down around 5%, EBITDA down around 45% on a year-on-year basis. Margins have come in at around just about 10%. Tell us, what was the key reason for the decline this quarter, the key reason for such weak numbers?
Okay, there were quite a few reasons. One, Q1 is normally a slow starter because dealers lift higher volumes in March. So April is typically a slow starter. And the month of May was also impacted by elections. I think quarterly volume offtake was weak, so should start picking up from the current quarter. And we are still hopeful of achieving our volume guidance of 15% this year.
Mr. Venkatramani, good afternoon. Thank you for joining in. You're expecting the situation to start improving from this quarter, as you just mentioned. Do you think that this is going to be a sustained trend because of what you are witnessing on the ground? What's the situation there as we speak right now?
Yeah, the situation is positive, and it has been positive, even last year when our domestic volumes were flattish. The problem is not demand. It's primarily because there's been a significant increase in industry capacity, and imports also made significant increase last year. So supply has been a problem, not demand. And with the changes we have made in our sales team, and we have also incorporated more team members into the sales of both the teams. So that should help us to achieve the volume guidance for the current year.
Okay, so you're getting aggressive on sales. What would that do to margins? And the reason I'm asking is that you've said that supply has risen. So I'm assuming competition is increasing in the segment. And over that, there could be probably price competition. Give us a sense in terms of where margins would go, considering that you are beefing up on your costs when it comes to sales. You are dealing with competition. You're dealing with possible price cutting also at this point in time. What would that do to margins if in case you do manage to also, maintain that volume guidance of 15%?
Yeah, if we maintain that volume guidance, we should achieve the margins we achieved in Q4 last year. I'm not expecting any significant improvement in the margins this year as compared to Q4 of last year, primarily because, the significant increase in capacities has put a constraint on our selling prices in spite of increase in cost. But now I think timber cost has peaked out, and we should see a gradual reducing trend in prices, which should catch momentum from the next financial year.
So when you say margins, what can you guide us on? What would it be? What is possibly the range? Are you going to improve from this 9.9% that you reported this quarter? If so, to what level? What would your exit rate be for FY25, which you're internally targeting?
We are targeting margins of around 15% for the company as a whole, and around 16.5% for the MDF segment.
Right. Mr. Venkatramani, I wanted a word on your plywood business, because for the quarter, your volumes were down around 22%. The realizations were also down around 7% on a year-on-year basis. Do you see that trend improving as we go into the next 3 quarters of the financial year? What's your outlook on the plywoods business?
Yeah, we are expecting improvement in the plywood business. We had a string of degrowth in the last few quarters. But like I mentioned, we have made changes in both the MDF as well as the plywood sales team, and also cut down on admin and corporate expenses. So that should help us to turn EBITDA positive in FY25.
Are you looking to take on some debt as well? One final question from my end, sir. You have a capex plan of around 210 crores, if I'm not wrong. What is the current debt picture, and are you looking to take on more debt to fund this capex plan?
Okay, we are currently sitting on a debt of 280 crores, of which 66 crores is for the existing business, and we have taken 214 crores for the expansion project. I expect we will be adding the expansion project.
Okay, just quickly before we let you go, just wanted your sense in terms of the volumes. What were your blended volumes this quarter? What do you expect to probably do next quarter?
Okay, I wouldn't like to give a quarterly breakup right now. So like I mentioned, we achieved about 97,000 cubic meters of domestic volumes, 21,000 for the export business, and we expect a gradual improvement in the volumes month on month. And that should help us to achieve the volume guidance of 15% for the MDF business.
All right, Mr. Venkatramani, thanks a lot for sparing time and talking to us on the quarter gone by and the road ahead for the company as well. That was the management of Greenpanel Industries saying that supply is a problem but not demand. The stock, though, seeing a bit of profit booking at current levels. That's Greenpanel Industries is the stock that I was mentioning about. 4% lower currently at 342, seeing some bit of profit booking as we speak. Time for a short break here on Halftime Report. On the other side, more corporate conversations continue. We connect with the management of Skipper to discuss their earnings and the outlook going forward. Stay tuned. Back on the other side. Back with us here on Halftime Report. Corporate conversations continue, and let's now talk about Skipper. The first quarter was a strong one for them as revenue nearly doubled, driven by the engineering and infrastructure segment, and their net profit also doubled on a year-on-year basis, but their margins contracted while order inflow is also subdued for the quarter. Now, to discuss more on the performance, Sharan Bansal, the director of Skipper, is joining in on the show now. Sharan, good afternoon. Thank you so much for joining in. I'd like to start off with the order flow itself. It was slightly subdued, and if I can see the trends also in the past, the order flow number has been pretty volatile, if I can call it that, because 403 crore this quarter, 416 the last quarter, third quarter of FY23 it was almost 2800 crores. So, and this time I'm assuming that the order flow was subdued because of the elections. Which is the segment that has been the most impacted, and do you see this 400 crore number improving as we go forward into FY25?
This slight correction, the actual order inflow has been about 700 crores this quarter. And honestly, it's in line with our overall annual target of an order inflow of between 4,000 to 5,000 crores. So if you see the last several quarters, we have been, if you see the whole of last year, we took in an order of approximately 4,200 crores. And that there was variations across the quarters. In some quarters it was as high as 1,500, and some quarters it was below 500. So honestly, as long as the annual order intake is maintained, which we are quite confident that looking at the bidding pipeline of approximately 18,000 crores that we have, both on the domestic and international side, we don't see a challenge in meeting our overall annual inflow targets.
Your annual inflow target for the year is 4,500 to 5,000 crores.
Correct, that's right.
Okay. And what is the remaining 3 fiscals looking like in terms of the order inflow on an average? Do you think that you can probably even better this number?
Well, I think, of course, the aspiration will be to do better. However, looking at, we have enough on our plate right now as well. We currently at a 5,800 crore closing order book that we have as of quarter 1. We obviously are fully booked for this year and part of next year as well. So we do have a lot on our plate for execution. So we're actually quite, we don't mind this slight delay in order inflow on the quarter 1 and quarter 2 side. Having said that, look, there are, like I said, domestic ordering has been subdued because of elections in quarter 1. Part of quarter 2 also we may see affected, but I see there's enough opportunity both on the domestic and international side to make up by the year end.
Okay, so that's a good problem to have, where you probably want slower amount of orders to come through because you don't have that capacity to probably cater to it. What I meant to say is that what is the demand looking like? And you answered it partially, but it seems as though the international business seems to be more robust in terms of demand vis-a-vis the domestic.
Well, actually, it's the other way around. Domestic market has been very, very strong for the last year and a half, where tendering activity has been extremely strong. And we find that that is likely to continue, and it is only going to be seeing an uptick up till FY30 and FY32 perhaps, because even the government of India has upped its total peak power demand by FY32. We see a lot of action happening even in the budget. We saw allocations to thermal power plant and nuclear power plants now. So we feel that it's only a temporary blip right now, but there is, in terms of order demand, domestic markets are not going anywhere. In terms of international demand, renewables is driving the demand in most markets in the 65 countries that we are operating in. And we see healthy bid pipeline in all those markets.
Sharan, firstly, I correct myself on the order inflow bit, but since you mentioned that the order activity has been pretty robust, usually you would find that you would want to expand capacity to cater to this increasing order inflow. Is there a capacity expansion plan on the annual? Because I know for a fact that there is an expansion underway for the engineering segment. When does that get commissioned as well? And apart from that, is there any expansion plan on the annual?
Yes, surely we have taken on a capacity expansion plan of approximately 75,000 tons, which will increase our capacity by about 25%. And we've taken on a capex of 200 crore plus for this year for that. And we expect that this commissioning should happen towards the end of this year.
So do you think that you would, with this kind of order inflow activity, you would want to revisit your revenue guidance? You're aiming for a 25% CAGR over the next 2 years. Do you want to revisit that and say it on the upside?
No, as a company, we believe that 25% is a healthy CAGR growth to target. We have done much better last year than 25%. And honestly, look, there can be variances quarter on quarter, but as long as we are meeting our guidance of 25% plus, we definitely aspire to do much better. But I think that's a healthy target for us to take over the next couple of years.
Okay, all right, Sharan, we're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's Skipper. That stock is doing well in today's trading session, up around 4% sticking to its guidance of around 4,500 to 5,000 odd crores in terms of order inflow, and they've done over 700 crores in terms of order inflow this quarter. Currently, the order book stands at over 5,000 odd crores for the company. We'll take a short break. On the other side, we'll connect with the management of IdeaForge to discuss their Q1 numbers. Welcome back. Well, for the Nifty, 24,900 inch closer to the levels of around 25,000. We have the Ambuja Cement numbers on your screen. So EBITDA has come in at around 646.3 crores versus our pool of 711 crores. So that's below revenue. I think missed estimates. It should come up for you. Net profit has come in higher at around 571 crores versus 494 crores. So let's see, what probably went right on the bottom line. Revenue at around 4,516 versus our pool of around 4,699. So what we can assess is that there is a miss which is come in on the revenue as well as in the EBITDA. But the profit is better than expectations. The margins have come in at around 14.3%. We were working with around 15.13% for Ambuja Cement. So that's a couple of details. We'll get Nigel in to talk more about it. But prima facie, looks like the profit has done better. We need to see if there's any kind of exceptional lower interest costs or any kind of outflow. But otherwise, the revenue as well as the EBITDA have missed estimates. And in fact, the stock, as you can see, is just about flattening out, Hormuz.
It's looking choppy as of now. There's a margin contraction. Margins are also 100 basis points below what the street was estimating. So 14% margin, 14.3%. The profit is also down around 11.5% on a year-on-year basis. So we'll get more details from Nigel as soon as we could. But Ambuja, as of now, flattening out 675 on the stock. But shifting focus to GAIL now, which is surging on the back of its strong first quarter results. Sonal is here to get us the earnings fine print and, of course, the conference call takeaways. Sonal.
Well, yes, let me start with the conference call takeaways. It took place just a while back where the management sounded very positive. They have given guidance on different segments as well. They say this time around it was a good quarter because of increased natural gas marketing volumes and also because in the domestic markets and also higher transmission volumes. They saw better gas trading margins this time around. That is something that we saw in the numbers as well. There was an increase of 5 MMSCMD volumes in domestic market, which was led by the power segment, and marketing EBITDA this time around should be around 4,500 crore rupees in FY25 versus 4,000 to 4,500 crore rupees earlier. The gas transmission volume should be around 130 to 132 MMSCMD in FY25. They expect to grow transmission volumes by 10 to 12 MMSCMD in the next 2 to 3 years, and they are not seeing any downtick in transmission volumes due to low power demand that we are talking about in Q2 as well. It was a strong set, so reiterating the numbers, fourth consecutive quarter of strength in the numbers, and it was a beat on all parameters. Margins up 240 basis basis points sequentially versus an estimate of around 11.1%. Profits came in at 2,723 crore rupees. Beat was led by natural gas transmission and gas marketing segments, where both the segments saw an increase on a quarter-on-quarter basis. Citi has a buy call with a target of 250 rupees a share. Company reported a solid quarter one with EBITDA coming in 33% ahead of estimates. Petchem and LPG were weaker than expectations.
Okay, all right, Sonal. Thanks very much for that. So GAIL doing well. So that stock is up around 3% odd. Ambuja Cement still about holding with a gain of around 0.4% at this point in time. We'll get more details on the volumes and realizations in just a bit. But in the meantime, let's talk about one company, IdeaForge. Their Q1 turned out to be very weak with the company's margins falling to around 4% from 29% a year ago. The order book also remained muted. To discuss this, we have Ankit Mehta, who's the CEO of the company, joining in. Ankit, hi, welcome to the show. Well, definitely a weak quarter for you all. Just wanted to start with the order book. Your order book, and correct me if I'm wrong, currently stands at around 54 odd crores. And there was no significant order win this quarter either. Why is that? What took place this quarter?
So there are certain large programs that we are tracking, and those large programs I had mentioned in the previous quarter's call as well, that we are tracking an L1 pipeline of about 300 odd crores. We have actually bidded for more contracts where we are the only player under consideration. This is particularly in the international market, and we have pretty sizable opportunity size on the international market as well, and we are in the process of tracking very closely the closure of those opportunities. So we are essentially in the build phase of the order book, and we should see the results of that in the present and the coming quarter as well, mostly in the coming quarter.
And Ankit, good afternoon. Thank you so much for joining in. You've mentioned that you are witnessing a significant opportunity and you are tracking down the closure of those orders. Could you quantify those for them? And part B of my question is, you are L1 in 300 crore worth of orders. The figure in the previous quarter was also the same. Now, is that have you bidded for some extra orders, or those L1 orders from the previous quarter have not materialized into a full order for you?
No, so of course, we have closures that have happened in the year from the in the past quarter from the run rate business that we have. The large opportunities, as you know, have a relatively larger, closing time frame. And therefore, a lot of opportunities that we mentioned in the L1 in the previous quarter, they continue to be in the opportunity pipeline, and we have bidded for more. So this 300 has a little bit more coverage on top of this as well. So we are tracking all of those opportunities. So we are quite confident of closing this number to make sure that we are able to deliver on the year's overall growth that we are planning.
Okay, so I'm just going to ask you about your overall growth that you're targeting, especially in terms of the margins. But out of this 300 crores, how much do you expect will convert?
In terms of order book, it will convert. In terms of revenue, we are going to continue to plan for maximum conversion in the year, and that's the process that we are presently on, and we are tracking that very closely.
Okay, so you're expecting majority of the 300 to convert?
Yes, I mean, that's the plan that we have to build.
Okay, now just about the entire fiscal FY25, what is your guidance in terms of revenue and in terms of recovery of margins?
See, I think overall, we do not guide revenue at this point in time, but margin profile should be similar to last year in that broad sense.
Okay.
Right. So you also mentioned in your earnings call, Ankit, that you are seeing a revenue opportunity of around 250 crores in the next 2 to 3 years. Where do you see that coming from? And is there a particular segment? Because considering Q2 is supposed to be the weakest quarter for your company, do you see more opportunities materializing in the second half of FY25?
Yes, in terms of closures, it is expected in that direction. Obviously, a little bit of that delay is also coming from, overall, we also had our elections in the country, and some push out does happen because of that, as you would already expect. In terms of the 250 crore opportunity that we were talking about, this was specifically for the SAR payloads that we have partnered with Galaxy for. And the kind of opportunity we see with those payloads coming into our development and productionization pipeline, we should see opportunity build up just from that one particular payload that we are trying to build with them. And that's an indicative of how, when we do new collaborations and new products, how that adds to our overall revenue opportunity bucket.
So assuming mentioning the fact that Q2 being a weak quarter, very quickly, Ankit, do you expect Q2 to also be similar to how the first quarter has panned out, or do you expect that to be slightly better?
I think Q2, given where we are on the order book, we should expect outcomes which are not going to be significantly better than Q1. But like I said, once the order book fills up, the overall annualized outcome should be very similar or better than, not similar, in fact, better than last year.
Okay. All right. We're going to leave it on that note. Thanks very much for joining in and speaking with us. So that's IdeaForge, expecting a possible pickup in terms of numbers coming through. In terms of margins, they expected to be similar to what they were in the last year in FY24. They closed FY24 with 18.6% in terms of margins. They are L1 on 300 crores in terms of orders. We'll take a short break. On the other side, we'll focus on what to expect from a lot of big numbers coming out. Stay tuned.
Back with us here on Halftime Report. On to some big earnings for the day. M&M will be reporting its results anytime now. Sonia is here with what to expect from the numbers. Sonia.
Well, thanks a lot for that. So as you rightly pointed out, big numbers coming through from the auto sector. M&M is one of them. I'm expecting a good set of numbers. A revenue growth of 16% is what the poll is throwing up at almost 30,000 crores in terms of a top line. The EBITDA growth will be 20%. The margins will be largely stable at around 13.8%. And the profits expected to come in at 2,683 crores. Now, the volume growth for M&M has been decent this time around. It's an 11% volume growth that we've seen. This is largely because of the good 13% growth in the auto sector and a 6% growth in the tractor sector that will lead to an overall volume growth of 11%. We're also expecting a favorable product mix, and hence there's a 40 bips year-on-year gain in the EBITDA margin that we're looking at. The auto division PBIT, or the margins, are expected to improve 130 basis points year-on-year to 8.8%. Remember, M&M has been one of the big movers. In fact, if you look at the stock price, the stock is up 70% in 2024 already. Decent set of numbers expected today. Back to you.
Okay, all right, Sonia, thanks very much for that. So that's on M&M. We do have Maruti, which will be releasing its numbers today as well. So that'll be important to track. Just want to point out that there are lots of buzzing stocks today within the pharmaceutical space. So we have stocks such as Dishman, which is up around 9.5%. In fact, the stock has rallied around 10% this week. We have GPT Healthcare, which is up around 8.5%. Granules, which is doing well as well, and Suven Pharma, which is up around 6%. So when no news out, in fact, their Q2 numbers, the date is not out as yet either. That stock is up around 6%. But nonetheless, we have Tata Steel, which will be reporting its Q1 numbers as well. Nigel's here to tell us what to expect.
Well, that's right. Later this evening, we'll have Tata Steel's numbers. And on the revenue parameter, the consolidated revenues could be lower by close to around 4% because steel prices have been more or less lower. The EBITDA number, though, that will move up by close to around 20%. And for Tata Steel, we look at the operational performance. We look at the revenues as well as the EBITDA number. Not so much the profitability number because that's all over the place. A couple of one-offs, sometimes as an exceptional item as well. But what we look at is, in fact, the geographic breakup. India business and Europe. Now, if you look at the India business, we already have the provisional numbers with us, both in India as well as in Europe. That's Netherlands as well as UK put it together. The factors at play. For the India business, well, we're working with the EBITDA per ton at around 13,450 rupees per ton. So that's the crucial number you should be looking at. There'll be some benefit of lower coking coal cost, but pricing has been under pressure. For the Europe business, well, watch out for an EBITDA loss, but the losses will be sharply lower in comparison to the previous quarters. So the number we're working with is negative $36 per ton. That's going to be important. How is that? Netherlands business turns profitable, while the UK business continues to struggle. As always for Tata Steel, commentary and debt is something that we'll track.
What about Coal India as well, Nigel? That's also coming out with numbers later this evening. What's expected from there?
Well, that's right. For Coal India as well, it's going to be a busy evening with Tata Steel and Coal India as well. For Coal India, top line as flat as can be. EBITDA number could see a bit of a decline by close to around 2%, and profit number should be in the vicinity of around 8,000 crores. The operational numbers are already in, and the top line, well, it's flat because we have seen already that the volumes are up by close to around 5.5%. But then why is the top line flat? Because realizations will be down, predominantly because the e-auction pricing has been under pressure, and the street is prepared for that. So blended realizations will be lower. That offsets any kind of good work done on the top line on the volumes. The margins as well will see a compression because pricing is weak, and Nuvama, they have put out some estimates. The e-auction prices, they are working with a decline of around 30 to 35%. The volumes, though, will be a little bit higher. So that will partly offset the pain that will be seen on the realizations front. Low realizations from e-auction, that offsets any kind of operational, operating leverage that we see as well. So around the 28.5% is the margin number. The commentary to track will be how is pricing shaping up, particularly on the e-auction side of things, how is power demand, and what do they plan on doing with the cash in its books. Also watch out in case there's a price hike. That's something that we'll have to track very, very closely. Back to you.
Okay, all right, Nigel. Thanks very much for that. So that's on Coal India and Tata Steel. But before we take a break, we're thrilled to announce the College Connect program under our ongoing season of HSBC presents CNBC TV18 Future Female Forward, the Women's Collective. Recognizing college students as the leaders, opinion makers and change makers of tomorrow, this unique initiative encourages the youth to foster inclusive and diverse workplaces, drive gender parity and tackle societal and business challenges when they join the workforce. We're kicking off at IIT Delhi on 3rd of August from 3 p.m. onwards with some of the biggest leaders and voices joining in. Stay tuned. Welcome back. Well, Godrej Properties is in focus. It just reported its numbers a while back. Stock is reacting to its numbers. Sonal joins in to tell us about the real estate major and what the numbers look like.
Well, yes, it was a good set reported by Godrej Properties. In fact, the company has gone ahead to say that they will meet or maybe exceed their guidance for FY25 as well. There is a quarter-on-quarter decline that we are seeing in terms of volumes on a high base. However, it's a very strong growth on a YY basis. Company has booked most of its volumes in Bangalore this time around, which has not been the major market previously. But if you look at the numbers, area sold is up almost 300% on a YY basis, up 10% sequentially. Bookings are up to 83% on a YY basis, down 9% sequentially. Collections are up 54% on a YY basis. They are down 36% on a sequential basis. If we talk about the city-wise breakdown, NCR used to be the biggest market. That's where the bookings are highest as well at 3,400 crore rupees. Volumes at 2.32 million square feet, but Bangalore has seen the highest volumes at 3.32 million square feet. Mumbai metropolitan region with volumes of 1.97 million square feet and Pune at 0.5 million square feet. They have reiterated FY25 guidance and they say might exceed it as well. Bookings at 27,000 crore rupees, which was liked by the street when they announced it at the end of FY24. Deliveries at 15 million square feet and business development at 3,000 crore rupees as well. Their balance sheet in terms of net debt, that's where the number has been increasing off late. Net debt has increased to 7,432 crore rupees versus 6,200 crore rupees on a quarter-on-quarter basis. The cost of borrowing has also gone up, but the company says this is for business development and they have enough cash flows to support that. But yes, good set this time around.
Showing up in the stock price as well. Sonal, thanks a lot for that. Godrej Properties trading with gains of around 2% after the earnings announcement. But the other stock that's done well, as Ekta just mentioned a few minutes ago, is Granules India, and that is building on the gains from yesterday after the earnings announcement. What's working for them?
Well, yes, I'll take you through the numbers first. That came out yesterday. Revenue up around 20-odd%, margins 22% versus 14%, profit of around 134 crores. North America did well. It was up 45% on a year-on-year basis to 870 crores. Finished dosages did well. It was up 66% year-on-year. Net debt to EBITDA reduced to 0.77 versus 0.98 times year-on-year. Now, in terms of the conference call, they are expecting an improving trajectory in the financial performance driven by oncology products. They expect significant impact from the dominance that they have in metformin, which is a diabetes drug, in the diabetes segment. Employee expenses are expected to increase at double digits in FY25 and then reduce in FY26. Margins should improve from the current 22% and be much above 20% according to them. And price erosion has stabilized at mid to high single digits. So overall, seems as though they are expecting this operational performance to continue for Granules, and that's primarily what the street likes at this point.
The street likes it indeed. The stock is up for the 8th day in a row today, is Granules India, and has gained 25% in these last 8 trading sessions that the stock has been on an upward trajectory. Now 7% higher at 630 is Granules, and the stock on the 19th of July had closed at just above levels of 500 rupees. So good going there for Granules India. Time for a short break. More on the markets and other specific stocks on the other side. Stay tuned. We'll be right back.
Stocks now. Ajanta Pharma, in fact, is in focus, reacting to its conference call takeaways from yesterday, from last evening. They've raised their EBITDA margin guidance to 29% plus or minus 1% for FY25. They've lowered their consolidated tax guidance to 24%. Their US business in Q1 was around $27 million, down by around 4 million Q on Q. And they expect that the US business will record a single-digit growth in FY25, but they expect the launch momentum to pick up in the second half, as well as in FY26. So Africa business also did well. It was up 44% on a low base. FY25 should see a very good growth in the Africa branded business, up to around 20%. But medium term, it should probably moderate to low double digits. Elara has upgraded the stock to accumulate versus reduce. Their target price is higher. Nirmal Bang downgraded the stock to accumulate versus buy. That is because of the valuations raising concerns. And Equirus has retained its short on Ajanta Pharma. The stock is holding up quite well, up around 3% at this point in time. Well, on that note, we need to also wrap up on Halftime Report. Business Lunch will take all of the action forward. Stay tuned.